and welcome to Financial Quotient, our series on women and finance. I'm your host, Surabhi Upadhyay. Now, over the last couple of weeks on this series, you've heard some of the country's biggest financial voices talk about the need for women to take more charge of their financial destiny, to take greater responsibility, greater ownership and accountability of their own money. Today, we get down to brass tacks. Today, we'll be, of course, discussing with our guests what are the specific do's and don'ts. What are the things that women need to keep in mind while taking charge of their finances? So let me quickly introduce our panel of experts. I have two of them with me on the show today. Lakshmi Iyer, CEO, Investment and Strategy at Kotak Alternate Asset Managers, and Feroze Azeez, Deputy CEO, Anand Rathi, Private Wealth. Thank you very much, lady and gentlemen, for joining in. And it's great to have you with me in the studios, as usual, Feroze. So glad you could make the time. Same for you, Lakshmi, as well. So we have a lot to talk about. I can tell the two of you that we've heard from, former heads of large banks, global and Indian. We've heard from a lot of, investment experts on the series so far. But I thought we really want to get down to the checklist today. The immediate do's and don'ts that women have to keep in mind, cutting across age categories. So Lakshmi, I'll start first with some opening thoughts with you. Because you are an investment manager, you're a woman, you're in financial services, and you're seeing so many women around you. First of all, have trends changed? Are women willing to take more ownership and responsibility for their money?
Yeah, hi, Surabhi, good afternoon. So it's a very, very pertinent question that you have raised. Has the trend changed? Well, I would say the trend is changing. I think that is the right way to put it, because we are somewhere at the cusp of being totally unaware to being aware that financial planning is gender neutral, and there is equal stake as a lady in the entire financial planning journey, as is the male in the family, be it the husband or the father or the sibling or whoever the case may be. So I think that is one interesting, narrative that at least we've seen over the past few years of having interacted with women and done many, many women-centric seminars on financial planning. And second important thing is that there is this innate desire for women, and I would say COVID probably could have accentuated that pace, that they want to be noticed as managing their own finances. I think so. These are the two key trends that are clearly shaping up the entire investment journey.
Well, that's a promising start. It's good to know, good to hear. Feroze, what about you in your own experiences? Is it still men calling all the shots, or are more women at least coming to the discussion table in terms of where to invest, where's the money, where's the will, etc., etc.?
So I think the trend is changing. Of course, not to my satisfaction, to be honest with you. Of course, there are green shoots of that happening, and I think you're catalyzing that. CNBC-TV18 might have more men as viewers, but you give them information. So I think that's a great inspiration as a start point for most women. That's on point one. Point two, I think when we are in the festive season almost, so I think Goddess Lakshmi is something which you can take inspiration from, right? Because a lady is whom we refer to when we speak of a goddess, right? It's not a god with Lakshmi, right? Goddess Lakshmi.
Pleasing Lady Luck, and we're pleasing Goddess Lakshmi, as you're saying, especially in this season, right?
Absolutely. I think you should become the Lakshmi of the home, which is very critical. Now, the problem or the impediments, let me not call them problems, that's a more negative term than that. The impediment is that we wanting to do a high jump. The first baby step is, whoever, let's assume your current status is that you're not calling the shots. Let's go with that hypothesis for the moment. And some man in your life, could be your husband, your dad, your brother. If somebody is assisting you, it's very important that you start having meetings with them. Now, let's assume if you have a distributor. Like in our case, when I deal with an HNI, I insist that the spouse, if it's a lady, sits in that meeting. So if you do that for the next 12 months, no learning. Don't worry about what you learn, whether you're going to be able to take decisions or not, but sitting through that meeting, however boring it might sound, which it does always, financial jargon is not very pleasing, but you should make, the first checklist is sit in those meetings. Second is make sure that when you are sitting in those meetings, try and jot down questions which you didn't understand. If you're able to start with this baby step, A plant, to transform it into a tree, first is a seed, then it becomes a plant, and then becomes a tree. So you have to plant that seed today, if not yesterday.
Absolutely. You have to start investing in your own, I think, well-being, in your own financial health, and then you can get into investments per se in the securities market, right? The idea on the show today is to talk about women across age categories. So whether you're a young working professional just getting into the earning zone, or you're a mid-age career lady, or you're someone who's looking at your retirement or your own spouse's retirement, what are the things that you must keep in mind, the hygiene factors that you must not forget? So Lakshmi, let's start with some house rules, maybe some golden rules that can apply across categories to women of all hues, all strata, and then we'll start with the younger girls. Your thoughts?
So I think the golden rule is start as of yesterday, and for the rest of the pack, please start today. I think that is the most important mantra. Often on what we end up doing is, say, assuming we are working women, and early on in life, the adrenaline rush is so very high that whatever you earn typically gets, expended. So I think it's time to reverse that rule and tell yourself that whatever is your income, you keep aside your savings, and then the rest you expend. So once you make this as your golden tenet, I think de facto those savings start getting channelized, and therein starts your financial planning or your investment journey. These sound very, very commonsensical, Surbi, but I can tell you with great degree of conviction and by first-hand experience that women seldom tend to practice this as a mantra or as a regimen. So I think imbibe that, and then you go obviously one step after the other. As we do a goal seek, for example, in Excel, similarly, you take milestones after the other and then traverse along your financial journey.
Absolutely. It sounds very simple, Lakshmi, but I can tell you, just hearing you, it's a very simple equation, but it's a huge mindset change. If your earnings minus your savings becomes your investment and your expense, not the other way around. Usually we earn, we expend, and whatever's left over we try and save. So I think it's a small equation, but it's a huge mindset change, and thank you for pointing that out. Feroze, I want to come to you for some overarching rules, and also in terms of the preference for assets, because I know you've been looking at a lot of data around equity versus gold, equity versus real estate. What trends are coming up when it comes to women and the preference for where to put money?
Yes, I think firstly I concur with Lakshmi, and she stole my point. But coming to the other point.
She's a smart woman who knows money a lot.
So in the chronological order, I'm rightly the second. From a standpoint of, let me tell you one rule or two rules. One is that I have seen when you're speaking with a lady, the affinity or the affection towards physical assets is a lot more. Now, then I try and reflect it upon this whole data. This is out of 18 years of meeting so many people. Generally, if there is a lady that she's inclined towards bringing in real estate and gold into the picture, which is nothing wrong.
But you're saying this is not just a stereotype. We tend to believe this, but you're saying you've seen hard data that kind of supports this thought or this theory.
Yes, absolutely. And it also, there's one more theory that the chalti aurat ki hai. If you look at the Indian savings out of 670 lakh crores, 50% or 48% is in physical assets. Then if the lady has love for it, and then if she is the actual ultimate person on the driver's seat, men might be in an illusion that they are driving the car, but they're not. Now coming back to the hard data, that when you speak to a lady, the affinity is a little more. Why could this be? This is because we financial services stakeholders have made it complex enough to intimidate that gender away. And if you look at the data of these two assets, now we do computations of calculations of real estate portfolios. We analyzed 199 portfolios of real estate and tried to find out the compounded return these 487 properties of 199 human beings had. The 487 properties generated a return, give or take, of 8.5%, compounded only. 10.82 years was the holding period of these 487. It's not like 1 year holding period. You gave it good 11 years. And if this investment value was 357, the current value is 900 odd crores. If on the same day these gentlemen and ladies bought themselves Nifty, the 917 crores would be 1638 crores.
Oh.
By doing nothing but just on the sub-registrar, the day when you went to the sub-registrar, you didn't go there and bought yourself on a click of a button Nifty, these 199 would be richer by 740 crores. Now, that's some serious data. And this is no judgments. I personally think this is just CA4 data. CEOs have to decide, which are the owner of the money, what they wish to do.
Okay, fair enough. So I think that's a compelling case to look beyond asset classes which are easy to understand. And I think you raised a very valid point. And in some ways, that's kind of hitting the nail on its head. Lakshmi, come in on this before we start with our checklist. The fact that financial products and financial markets are complex and they are getting increasingly more complex is one thing that perhaps really drives women away. I mean, even working women, maybe women even in the financial services, because you don't want to look at too many complications once you're done with your day job, right? How does one battle that?
So, two parts to it, Surabhi, to your question. One is that investments or investing is not rocket science. Because I can tell you for sure, I'm not a scientist. So you don't really need to be a scientist to do these investments. It requires, as I said, a little bit of common sense, loads and loads of discipline and patience. So people change DP on their WhatsApp, but the discipline and patience quotient is virtually lacking. So I think that is extremely important. And second part, we work hard to make our investments complex because we get thrown in a lot of these jargons, these terminologies, which can be intimidating even for the ones who are initiated into the world of finance. So to ease that out, you have to consult with your advisors, your distributors. Feroze rightly said, he works with so many entities, HNIs, families across the country. You need to reach out to them and you need to confide in them. See, there are two ways. There is a DIY, which is called the IKEA approach, and I get completely hassled, because so busy managing, money for investors that you don't have time for your personal investments. So the DIY can be intimidating, which is do it yourself. Every other fraternity, which is the bulk of the fraternity in India, should actually employ or, seek out the services of a coach. That makes the investment journey and the financial planning process way less intimidating and a very, very fruitful experience.
Okay, that's well said, well put. I completely, understand what you're saying. Get yourself a coach and then prepare for a marathon that at the end of it will perhaps give you handsome rewards. And that's, of course, the investing marathon that we're talking about. So let's get started, Lakshmi and Feroze, with respect to what advice you'd want to give out to young working women. And allow me, for a bit to add my one little bit, because I've learned from, the two of you over so many years and, I guess over decades now, that we need to start early. I remember I made my first investment because a salary check came in and you had to invest some of it. I admit that tax was a large reason why we started investing back then in something called ELSS. But, really, that was a long time ago. What is the advice that you'd give to young women today, Lakshmi?
So I would say when you're starting off young, obviously you are in that earning stage. You are in the growth stage as far as your entire life cycle journey is concerned. Start your finance. That's the time you need to plant the sapling and actually nurture it and nourish it and watch it grow. In the investment parlance, it means that your appetite to grow your investment kitty from point A or destination A to B has to be at its highest ever incline. In a treadmill run, it can't be at base level, it has to be at an incline. So, and that can be achieved only when your portfolio is equipped with steroids or caffeine boosters, as I call it, which is equities. So load yourself onto equities, depending on obviously the key thing, the caveat here is you may or may not want to put all your eggs in one basket, because you may have these milestones or journeys to achieve alongside your investments. But once you do that, I think, trust me, the entire process of reviewing this journey and doing the course correction will be a very, very rewarding experience.
Okay, fair enough. So start early, make sure you're on equities. Feroze, what else?
I think, if I have to say those 5 things in the chronological order which person needs to do, which women are great at, budgets, They're very good at budgets. COVID was the evidence. At least the previous generation of women was great because there's so much cash at home, because you guys are great at budgets. Of course, there could be some degree of sale in a mall which can take it away from you, but budgets is something which is a key strength which you have. That's one. Have a goal, because a lady has the power to think beyond their life. That's my experience. I've interacted with women. Men are impatient. They want it here and now. They would think till their lifetime. When I speak to a lady, she says, what happens to my grandchild? Okay, and she still doesn't have one. So make sure that you save, you make your goals. The next is you invest. Investing, like Lakshmi said, you will have to have equity in the portfolio, have an emergency fund. And lastly, pay off if you have any EMIs on your credit cards, which could be a possibility, because those are the most expensive loans you can ever take. You can't afford to get into a debt trap. At the age of 2025, when there's so much noise in terms of the expenditure pattern and the economy is growing and then you're wanting to spend, so these are the 5 things you have to do. Budget, then you make sure that you are having a goal, then you invest, then you create an emergency fund and pay up your expensive loans.
Okay, so don't go too sort of overboard with those, zero cost EMIs, etc., etc. So keep things in balance, I guess. That's great advice to start off with. We do have to take a very quick break on that note. On the other side, we take the discussion up a notch, because when you're entering your middle ages, any lady, more complexities come into life, and therefore maybe some more complexities in terms of money and finances as well. How do we tackle it? We'll discuss this after the break.